Stock markets soared in the final hour of trading on Friday as President Trump declared a national emergency over the coronavirus. The Dow Jones Industrial Average was up more than 1,985 points, while the S&P 500 and the Nasdaq also rallied over 9%. But this was also a rebound from Thursday's sell-off that was the steepest since the Black Monday crash of 1987. All three indices lost at least 9.5% following the mass cancellations or postponements of large social gatherings and sporting events. The major move on Friday comes as the U.S. Congress works overtime to pass a stimulus package. Additionally, there are reports that Europe is set to announce their own measures on Monday. Meanwhile, GMAC sent me a message. Among the comments made by GMAC, the main thing he is having trouble with is when to start investing cash. GMAC is not quite sure how to read the charts in light of all the global risk factors at the moment. He's also concerned that things are going to get significantly worse before they get better. Part of that concern is he fears the global debt markets will implode, sending us into a major recession or even a depression. First off, GMAC, you're not alone. Millions of investors are thinking the same thing. Several studies have shown that fear is much stronger as an emotion than greed, and that fear can paralyze even the most rational. The quick answer to this dilemma is charts, 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 and more charts. I've studied the charts so much that it's become easy for me to figure out the probabilities better than most. First, you need to identify a company, and then you need to follow it with charts day after day after day. After you follow the company during the up and down cycles, you'll get to know it so well you can figure out the patterns. What I try to do is give you a simple template for you to apply to a company, any company. And most companies in a sector will have similar charts, but when you find a difference, it could be good or bad. You just need to dig into the fundamentals to find out which it is. The longer answer is that I've lived through so many cycles, it's much easier to gauge the stock reactions these days. I remember when my father bought stock the day before Kennedy was assassinated. And I remember very well all the recessions and one time events ever since then. We have never had a pandemic. But then again, it's not every day a president gets shot. A 9/11 happens, a dot-com bubble bursts, or a great financial crisis comes along. It's always different, but it's always the same. Right now, the market's just trying to figure out how to discount the coronavirus. And I've done so many discounted cash flows that it would make your head spin. What I know is that the most important factor in this kind of discounted cash flow analysis is how long will the event last. But remember, when an opportunity arises, you need to be prepared because you need to act as fast as lightning. In this market, I've already studied several companies and I was ready to invest. In one of my recent videos, I went through the analysis of Berkshire Hathaway, so no need to do that again. So today, we'll take a look at Digital Realty Trust, which I recently bought during all the tumult and all of the volatility. So let's take a look. And here we're looking at the monthly chart that goes all the way back to 2005. And again, we're looking at Digital Realty Trust Inc., the symbol DLR. For disclosure purposes, I do have shares in Digital Realty Trust I just bought the other day. Now, looking at the price chart here, the most important is back here in 2009. You can see from that point on, has a nice arching trend line all the way up through the current time frame. Now, I look at this chart first and then I go look at the fundamentals. Once I'm happy with the fundamentals, I come back. And I like the fundamentals and I like the chart. What I like about the chart is we were near a 52-week high. But you look at the MAC, the high in the MAC was back there in mid 2017. And it's retreated down here and it's bottoming and ready to turn up. Now, I did a video on Digital Realty Trust before, so you can go view that as well. But I'm going to retrace my thoughts. So the bottoming process in the MAC is occurring, yet it's above zero, so there's good strength. Into the histogram, that shows also a nice uptrend. A lot of these oscillators will show the bottoming process and then the upward move. Same thing here in the RSI, as well as in the stochastics. You can see that. And then the volume, forget this move here. This happened after I bought. It was back here when I bought. So into the Williams, and you can see the Williams also has a nice bottoming pattern and moving on up. That bottom here and improvement. So going back up here. Once we entered the volatility the last couple of weeks, I had honed in on Digital Realty Trust and its MAC. The MAC had moved through, the fast line had moved through the slow line, so I was ready. So now I go to the weekly chart. Okay, now looking at the weekly chart, again, I'd done my research on the monthly and I'd done my research on the fundamentals. I was happy with both, so I moved to the weekly. And the weekly showed that we have a nice trend line moving up through here. Now, I certainly didn't get it at the bottom of the trend line because I saw it move all the way down here to nearly 115. So I wanted to get in, but I wasn't quite ready. So I ultimately got in at about 129, which is about right here on this black move here. So I got in at 129. But again, the fast line on the monthly had moved through the slow line on the MAC. And here on the weekly, it had bottomed, say, in December and moved actually through. The fast line moved through the slow line here in, say, January. So I knew it was on its way up. I didn't get in until about here. Down here into the histogram, same thing, moving on up, as well as in the price rate of change, moving on up. And I got in someplace around in here, more or less. And then here in the relative strength, all of these oscillators are showing a bottoming and an upward move. So actually, I was kind of late. So the volatility of the last couple of weeks did help me a bit. Bottoming and move on up. Again, I got in before this. I got in probably during that period there, and I probably got in someplace around here. Not exactly sure. But I've had quite some time, months, to take a look at this and to see the improvement. So I've been ready for some time. So I was just waiting for an opportunity. So now let's go to the daily chart. And now into the 6-month daily chart. And you can see here the volatility actually probably started there in late February with that move all the way down here, on up, back down, on up, back down, and on up again. So very volatile. So I just simply took advantage of that. I knew that I wanted to get into Digital Realty Trust, so I was biding my time. I didn't get the perfect price. Again, someplace in there about 129. But it was a good enough price for me. I was happy with it. I would be more happy if I got it down here, but I'm not going to fret about that. I'm never going to catch the bottom, and I'm never going to catch the top, and you won't either. So don't even try. Just get into a point or exit a point that you're happy with and move on. So the volatility occurred there, but going down here into the MAC, I saw this move here. It had moved on up, so I thought I had missed it. But the volatility started occurring at that point and came back down here, so I knew I had another chance. And this is where I got in, someplace right in about here. Again, this is the daily. So the rules for the monthly, the weekly, and the daily are all the same. I like to see when the fast line moves through the slow line in the MAC. That's my trigger point. Now, you can see the other oscillators pretty much echo the same thing again and again and again on the monthly, the weekly, and the daily chart. All of these look very similar. So I just simply had done my homework. I was ready. I had the cash. I saw the opportunity and I pulled the trigger. Now, today we hit a 52-week high. In all of this turmoil, we've hit a 52-week high. That's how powerful the system can be. You got to have your company picked out. You need to research it fundamentally and technically. And then you got to have the cash and you got to be willing to pull the trigger. Not everybody can do that. And it takes a lot of practice. So, GMAC, if you can't pull the trigger yet, don't worry about it. Just keep studying. Your time will come. And for today, that's ChewDog Charts. Thank you.